Hi, thanks so much for tuning in. You're watching BQ Prime. My name is Alex Matthew, and this is an earnings conversation. We're speaking with the management of RailTel. Sanjai Kumar, the chairman and managing director of the company, is joining in. And it has been a strong quarter for the company, especially if you look at that revenue number. It is standing, the net sales standing at upwards of 700 crore rupees, and that's a growth of over 53% for the year ago period. The PAT number is coming 40% higher, but there is an exceptional item. We'll be getting all of the details from Mr. Kumar. Mr. Kumar, like I said, thank you so much for taking the time. Could you tell us about that revenue number? It's quite a strong growth, over 50%. What are the drivers of that growth?
Yeah, so when we were talking in Q3 results, so because Q3 was also slightly under pressure, we expected this bouncing because of some spillover from Q3 and our routine business also getting delivered. So we were expecting and we are there.
Okay. But if you break that up for us, is there a major order that you have executed during the quarter that has contributed to that kind of growth?
No, there is no single major order. There are orders which were already in pipeline and we were in the process of implementation. There was slight delay in Q3 and we could do basically those projects in Q4.
Now,
it was a surprise for us.
And, it was a surprise for you.
Yeah.
Okay, so there is that exceptional item which I want to understand about 36 odd crores, and that is pushed your PAT higher by about 40%. Could you tell us what that is about?
So, see, ECL is a new concept in a sense that we introduced it 3 years back, and we are continuously rationalizing it. So this year also we have done a little rationalization, and that has now made us a balanced approach so that there's no skewed picture coming before investors.
Okay.
So now we think that we are fairly balanced.
Okay, so no further rationalization is expected.
I think there may be minor, but no major.
Okay. Now, on that higher revenue base, I'm looking at the EBITDA, and I'm seeing that it's actually a degrowth of about 7.5 odd percent. Why is that? I see that the margins have actually declined. Is that related to a certain order or the mix?
No, see, the telecom has been a big buddy for us when we talk of EBITDA. But since we see that the project proportion has been increasing continuously, and we were expecting also there's nothing unexpected or unanticipated. So now the project kitty has grown to 40% of total kitty, total revenue. So that will of course have a pressure on our margins. But what has been our thought process inside the company, that we will try to grow in projects by higher numbers, higher percentage, so that at least in following quarters and years, we at least have a robust PAT growth in absolute number terms.
Okay, I understand that. So then, from that perspective, as we've started the new financial year, could you give us a sense of where the order book currently stands? And do you anticipate that there will be lumpiness in the execution continuing?
I think the lumpiness is almost over, and supply chains have now completely, mostly, they have come back to the normalcy. And the project order book, the total order book, presently we have around 4,500 crore. And this year we are expecting around not less than 1,500 crore of deliveries will make from projects.
From projects specifically. So how much is projects? Oh, so projects out of the order book overall is 1,500?
Yeah, it would be around 3,000 crore.
Understood.
Yeah.
So out of that, you're executing about 1,500 in this year. And this is evenly split, or do we expect certain quarters again to have a higher share?
That may happen. See, because quarters for us, a small company, and quarters being a three months period, this may be there.
Okay.
Yeah.
So given your expectation and your higher thrust towards projects, and you said that you anticipate that this is going to script the margins, but on an absolute basis, the PAT number is going to go up. So that your investors have a certain idea of what to expect. I'm asking you what the range of EBITDA margins are likely to be in the new financial year. So 1,500 crores is a great number already. So therefore, revenue growth is seemingly in place. We're talking about the margin percentage.
So when you talk of EBITDA margin, again, percentage terms, there may always be a pressure, but in absolute terms, again, I will say that we will strive to have a good growth. But again, for this year, we may be hovering around 20 to 25% range only, uh, as far as EBITDA margin is concerned.
But correct me if I'm wrong, sir. The quarter gone by, it came down to mid-teens.
Sorry?
The EBITDA margin in the quarter gone by came down to mid-teens.
Yeah.
So therefore, this is an aberration, you're saying, and you're going to go back up to 20 plus?
We will always target 20 plus.
Understood.
Yeah, pressures will be there. Now we are gaining experience in project execution also. So we may try to have, I would say, better margins. If see, we are working on a partnership model, and the more partnership share is there, naturally we'll have to share the profit with them. So now we have started working on strategy wherein we will be having, we will be sharing more portion, executing ourselves, and giving a lesser proportion to the partner. So that will also help us in having a satisfactory or a better margin.
Just so that I understand this, sir, could I then understand from that statement that the average order size that you get, that you have been getting, now it is going to be a slightly larger order that you're getting per order? And what will the average order size in the new financial year be?
Yeah. See, there are the projects which we are executing generally are IT related, like smart city project, data center creation, and those projects also have elements of telecom services as well, where of course telecom services are being provided by us, or wherever we are not present, we take help from other telcos and data centers also. We have our own in-house data center, so we are trying to uh, create more data center services being provided by us rather than creating new data centers for them. So that will also help us in having higher margins and lesser proportions giving to the partners.
Okay, but the average order size, sir?
Average order size for us is somewhere around, few orders are very less, 100, 10 to 20 crores also, which are purely services. But then there are executable projects where 100, 200, 300 crores. And now this year we are eyeing even 500 plus crore single projects as well.
Understood. So that was my question. The size of the orders is going up.
Yes.
My last question with regard to your own spends and your own investments, where are you targeting your investments in the new financial year? Where is CapEx spend going to be?
CapEx part, we will be doing somewhere around 200 crore, which will be mostly used towards the network upgradation, and part of it will for creation of some additional data center capacity also.
Fantastic. Mr. Kumar, thank you so much for taking the time. Pleasure speaking with you on BQ Prime, and wish you all the best for the new financial year.
Thank you very much.